All right, let's get right into it. And I want you to forget everything you think you know about the stock market. Seriously. No complicated charts, no confusing jargon. We're about to break down how it really works. And trust me, the story is not what you expect.
You know, when you picture the stock market, you're probably thinking Wall Street, right? Suits, giant computer screens, flashing numbers. But that's not where the story begins. Not even close. Its real birthplace is way more adventurous.
Yep. You heard that right. The entire global financial system that we have today was born from the need to fund these crazy, dangerous voyages for gold, spices, and silk. It all started with ships, a ton of risk, and a cup of coffee.
And what's just incredible is how little this core idea has changed in over 400 years. I mean, think about it. Back in the 1600s, people invested to support a voyage. Today, we invest in businesses. But the goal, it is exactly the same. Bring people together to fund a big idea and share in the rewards.
Okay, so let's jump in our time machine. We're going back to the 1600s, the golden age of exploration, with a company that had a very big and very, very expensive problem.
Just try to imagine this for a second. You're trying to fund hundreds of ships sailing all across the globe. We're talking massive costs for the crew, the supplies, the ships themselves. It was an absolute logistical nightmare and way too costly for the company to handle all on its own.
So their solution was honestly revolutionary for its time. They turned to the public and basically said, hey, help us pay for this trip, and if the ship comes back loaded with treasure, you get a piece of the action. For the very first time, regular people could buy a small part of a massive commercial voyage. They became investors.
And this is the light bulb moment, right here. Traders started selling these shares, these little paper promises of future profit, in bustling coffee shops and busy ports. And without even realizing it, they had just invented the stock market, a public place where you could buy and sell ownership in an enterprise.
So how does that 400-year-old idea actually work today? Well, that same concept of public funding is exactly how companies get their start on the market. Just, with a little less rum and hopefully fewer pirates.
Let's imagine a new coffee company. First, they have a great idea, and they pitch it to some big investors. If those backers are in, they sponsor an initial public offering, or an IPO. This is the company's grand debut on the market, selling its shares to the public for the very first time.
And that piece you can buy, that's what we call a stock, or a share. And it's so important to remember this. It's not just a number blinking on a screen. It's a real certificate of partial ownership in that business. Your investment gives the company cash to grow, and in return, if they succeed, the value of your ownership grows right along with them.
Okay, so the IPO is like the big launch party where the company sells its stock to you. But what happens the day after the party? That's when the real action begins. It's where you and I trade those stocks with each other. And this is where prices start to, go up and down. Just picture a seesaw. It's that simple. When more people want to buy a stock than sell it, demand is high and the price gets pushed up. But if more people are trying to sell it, demand is low and the price falls. It's just classic supply and demand playing out every single second of the trading day.
But what's actually pushing on the seesaw? Right? Why do people suddenly want to buy or sell all at once? Well, it turns out the market can be a little emotional.
And that brings us to maybe the most unpredictable part of this whole thing, the human element. See, the numbers are only half the story. The other half is all about feelings, fears, and confidence.
I mean, so many things can spook investors or get them really excited. Did the CEO just quit? Is there some bad press floating around? Did the cost of coffee beans just shoot up? Did the government pass a new trade policy? And in today's world, this is all amplified by social media, where a single viral post can send a stock soaring or send it into a nosedive.
And this right here is absolutely critical to get. If enough people believe a company is in trouble, what do? They sell their stock. All that selling drives the price down, which makes the company actually lose value. In the market, confidence really is currency.
Which leaves us with this really fascinating question, doesn't it? We build all these complex analytical tools, but at its heart, the market often moves based on something as wild and unpredictable as human emotion.
So, after all this talk about Dutch trading ships and market psychology, where do you fit into all of this? Well, the game has changed dramatically. I mean, for centuries, this was a club for the rich and powerful. That's it. But the internet, it just blew the doors wide open. Now, through brokerage apps right on your phone, the tools to buy, sell, and trade stocks are available to pretty much anyone. And this is maybe the most empowering takeaway of all. The market isn't some distant, exclusive club anymore. You can participate. You can support companies you believe are doing good in the world, invest in innovative new ideas, and work toward your own financial goals. The journey that started on those sailing ships is now open to you. So we've gone from 17th century sea voyages right to the device that's in your hand. The technology has completely changed, but that core principle, it hasn't changed one bit. It's still all about people coming together to fund big ideas in exchange for a share of the potential profits. And so the only question left is the same one those Dutch traders faced 400 years ago. What ideas are worth investing in?